Hello and welcome to part 1 of Saving for Retirement. Let's get started. Hello and once again welcome to UAMS. Our objective is to provide you with important information regarding retirement benefit plans. After reviewing the presentation, please complete the Voluntary Salary Deferral Agreement form. More information can be found on the HR Benefits website. Please go to the link shown here for further details. If you have any further questions, please feel free to give us a call at the telephone number shown here, or send us a fax. You may also email us at askhr@uams.edu or drop by our offices. We're open Monday through Friday from 7:30 a.m. through 4:30 p.m. We're located on the 4th floor, Wing C of the Central Building. There are several reasons why saving for your retirement is so very important. Because you may not want to or be able to work your whole life. A survey found that 37% of current retirees retired earlier than planned due to an unexpected event, such as health problems or changes in their company. The earlier you start preparing for unexpected events, the better. Because you want to have enough money saved for a comfortable retirement. Many people assume that expenses will go down in retirement, but often that is not the case. Inflation means you will need more, not less. Higher property taxes could cause your housing costs to be more. You might spend less on clothing, except you'll have more time to go shopping. Many other expenses could arise. Increased medical costs and health insurance premium costs, financial help for children or grandchildren, or even elderly parents, and more free time could result in more money being spent on traveling and entertainment. Because you don't know how long you'll live. People today are living longer. Retiring at age 65 today, a man would have more than 50% chance of still being alive at age 81, a woman at age 85. A 25% chance of living to nearly 90, a 10% chance of getting close to 100. How big a chance do you want to take of living longer than your savings lasts? Because Social Security won't be enough. Do you know anyone whose sole source of income is Social Security? If so, is that person living comfortably on just Social Security? Odds are they are not. Some people use their retirement savings as a way to leave money to their family or to charities that are important to them. You don't want to have any regrets 10 years down the line. Saving $20 a week now may seem impossible, but the reality is that you cannot afford not to save. It will always seem challenging to put money aside for your future, but if you don't take advantage of saving even a little today, you may have to face the challenge of saving a lot later to make up for the lost time and money. It's mandatory. State law requires that UAMS contribute to a plan on your behalf if you're in a regular staff or faculty position. Sorry, but you're not eligible for UAMS contributions if you are temporary or extra help, a resident, and that includes medical, pharmacy, or chaplain or house staff, a student, or if you're part-time, equaling less than 50%. However, ineligible employees can still make unmatched tax-deferred annuity contributions. What is the University of Arkansas Retirement Plan, also known as the UARP? It's a defined contribution plan, which means benefits are defined by the actual contributions made to your individual account by you and your employer plus earnings and interest. It's a combination 403B plan and a 457B plan. We have 2 fund sponsors to choose from, TIAA and Fidelity Investments. Please be aware that TIAA has recently rebranded from TIAA-CREF to TIAA. Many options for benefit payout, including annuities, lump sum, and periodic payments, are available. Furthermore, enrollment is easy. If your employer offers a 403B or 401k plan, then consider yourself lucky. Not everyone is offered a retirement plan at work. Since your employer provides all the enrollment materials to get you started on your savings plan, then all you have to do is pick up a pen, fill out the enrollment form, and you're on your way to saving. Do it! How much does UAMS contribute to the UARP? minimally an amount equal to 5% of your monthly wages. But if you make personal contributions over 5%, UAMS will match up to 10% within IRS limits. So for example, if you do 1 to 5%, UAMS will do 5%. If you do 6%, UAMS will do 6%. If you do 10%, UAMS will do 10%. If you do 20%, UAMS will do 10%. It's up to you how much you want to contribute, but try to do a total of 10% combined, required, and voluntary. Right away, you double your retirement savings because of the match. 20% going into your retirement plan is great. Remember, the university is transitioning into a required employee contribution of 5%. The change is gradual and will spread out over 5 years, beginning July 2016 to July 2020. This amount will increase by an additional 1% each July until the required contribution is 5% in July of 2020. Your contributions. The university match is based on all of your contributions, whether they are required or elective. You can contribute on a before tax, also called tax deferred, or after tax basis. More on that later. The IRS limits how much you and UAMS can contribute for the tax year, but that usually only affects highly compensated individuals. So what are the IRS limits? Your tax deferred limits are actually double because the UA plan is a combo 403B plan and 457B plan. Your 2017 limits are shown here. So what are the order of deductions from my paycheck? If you're going to contribute more than $18,000 this year, the bucket illustration can be found on the Human Resources website. The bucket illustration shows the IRS limits for retirement contributions and how your contributions flow from one bucket to the next. It also shows the order of your retirement contributions. First, the 403B plan as pre-tax and/or Roth, then to the 457B plan as pre-tax. Then stop, unless you check the box to go back to the 403B plan and make after-tax contributions. Here's a tip for highly compensated employees. If you anticipate your UAMS pay will be greater than $270,000 in calendar year 2017, be aware that the UAMS employer contribution will only apply to your first $270,000. In order to gain the maximum UAMS contribution, you will need to contribute at least 10% each pay period. Please refer to the examples shown here. If your retirement contributions are made before tax, those are deducted before you pay taxes. This reduces your federal and state taxable income that's reported on your W-2. This does not reduce your FICA tax base. To illustrate, if you're in a 28% income tax bracket and you contribute $18,000 before tax, your actual cost would be $12,960, netting you tax savings of $5,040. You would be taxed on your contributions and earnings at the time you retire, or otherwise begin withdrawals. We also offer a 403B Roth. You can choose to contribute on a standard before tax basis or on an after tax basis to a Roth or a combination of both. Roth contributions are made from your paycheck after taxes are deducted. In other words, you pay taxes now on your contributions, but after 5 years and age 59 and a half, earnings on your Roth would be tax-free. A 403B Roth is particularly attractive to those who are ineligible to do a Roth IRA on their own due to high income restrictions. What you contribute to an employer Roth plan offsets how much you can contribute before tax. More information about 403B Roth is available on our website. Let us know if you've made contributions this year to a previous employer's plan before coming to UAMS, or will make contributions this year to another employer's plan, such as the VA Thrift Savings Plan. Some IRS limits apply to your combined contributions. We can assist you in avoiding an excess deferral, but the responsibility is yours to monitor this. When can I begin? Now. You can change your UA plan contribution at any time, generally to take effect the following pay period. Start contributing as early in your career as you can to benefit from the power of compounding returns. You don't want to have any regrets 10 years down the line. Saving $20 a week now may seem impossible, but the reality is that you cannot afford not to save. It will always seem challenging to put money aside for your future, but if you don't take advantage of saving even a little today, you may have to face the challenge of saving a lot later to make up for lost time and money. But don't put in more than you can afford. Also, if you have already received a paycheck, the required contribution and the minimum employer contribution will be applied retroactively. This is a retirement plan, not a general savings plan. If there's an emergency, you generally can't access your money unless you're retired. There may be limited circumstances that allow you to get a loan on your personal contributions. IRS penalties could apply to early distributions. Thanks for viewing Part 1 of Saving for Retirement. In Part 2, we'll continue to discuss our savings for retirement.